Hey guys, I know everybody has been watching, as well as us real estate agents and lenders have also been watching interest rates, not to mention buyers. Today the Fed cut rates by 50 basis points, and there's some confusion that I just heard another creator talking about that I thought might be worth kind of addressing. So when you hear about interest rates being cut, it's not a direct cut to mortgage rates themselves. So what we're seeing, like even today, if you got onto uh, Mortgage News Daily, which is a site that I look at just to kind of see what the national average is that's being charged for 30-year, 15-year mortgages, etc. The number that all these lenders are using, this is independent mortgage companies, banks, credit unions, anybody who lends money on homes. This is what they are looking at. They are looking at what the 10-year Treasury yield is. So if you looked at it yesterday, I think we were at 6.1. I've got the graphic above my head at this point. It's the power of editing. We're sitting at 6.15 as a national average at this point. And again, I'm not quoting rates. That's just what a public app said it was. So the industry had already taken into account that the Fed was going to make an adjustment to the Fed funds rate, which is the rate that they charge banks for overnight lending, which is indicative of banks' needs for money, etc. And again, what the mortgage rates are based off of is the 10-year Treasury yield. That actually went up from yesterday. So while the Federal Reserve has cut the Fed funds rate, the index, or the 10-year Treasury yield, ticked up a little bit. So that's why we're seeing rates a little bit higher. So things that they're going to be looking at, they being the lenders, other economic data that the Federal Reserve is looking at, unemployment rates, how's the economy producing, how are consumers consuming, because we are in a consumer economy. If those things back off, then those rates will continue to stay where they're at, and they may tick up a little bit. If things kind of really pick up and we start seeing unemployment go down, if we start seeing consumer consuming more, then you'll start seeing those rates lower a little bit. But then again, also depends on what inflation does. If inflation continues to tick up, then the Federal Reserve is going to hold course and or take back what they just did today. So things are looking good that they'll continue to move down. So if you've been waiting for the Fed meeting that was today, and then all of a sudden you see there's not a huge change in interest rates, even though they cut basically 0.5% off of the Fed funds rate, it's because the other economic data is saying that we're not quite there yet. Previous to back in my day, when I was a small banker, we didn't do any rate changes until the Federal Reserve made the announcement public. What we're seeing now is these mortgage lenders are kind of predicting what the Fed's going to be doing. Obviously, it's well known what the Fed looks at, what they are taking into account when they make their rate announcements. So right now it is something that's predictive. So the rates that the rate cuts that we saw in the last few weeks, those were predictive rate cuts that the mortgage lenders made in advance of or anticipation of a rate cut by the Federal Reserve. So while we didn't see a huge drop today, in fact we even saw it increase a little bit today, as we get further down the path, get a little bit closer to year end, see some final productivity from businesses that they monitor throughout this whole economic lens, if you will, then we probably should see that start to come back down. But right now, everything is looking in a better direction. Certainly not going to be 2%. I don't think we're ever going to see a 2% mortgage rate ever again. Comfortably, I think probably this time next year we'll be looking at 5.5%, 5.25%. Again, just my predictions. I'm not licensed to quote or state rates. Obviously, that's what lenders are licensed to do. So if you have a lender that you work with, by all means get a hold of them, have a conversation with them. If you need a couple of good lenders to talk to, I have contacts. We'll be happy to pass that information over. So again, as we've looked, it's a little bit better. Definitely better than the 8.2 I think we were knocking on the door just a few months ago. So things are improving. somewhat. A lot of that is just the resilience of the economy, and it does what it needs to do, and in that we are the economy. So keep doing smart things. I know we've got a few black eyes from this past couple of years that we're looking to get healed and get taken care of. So I know it's rough, but especially when it comes to getting into some of these homes, especially with our inventory. That's kind of the other thing too, is inventory is increasing, especially here in Oklahoma. I've been doing a deep dive the last few days on the number of homes listed. I've even broken it down into a few different communities. Still kind of working on finalizing and polishing that, and I'll be releasing that here. Would certainly, if you guys want to receive that newsletter, haven't decided if it's going to be a monthly or quarterly newsletter. Probably here, I'm kind of leaning towards monthly just because of how quickly things are changing. As we get more inventory, prices will stabilize, which we're already kind of seeing that they have, and they kind of come down a little bit. Not going to be any 2008 crazy fire sale stuff, so that's just not going to happen. The demand for housing is too high. Right now, what a lot of the buyers are holding off on is the cost of the money to borrow and the cost of the house to buy or build. I know we had to shelve our plans to build a house out here on the property that we bought 5 years ago because costs literally doubled overnight. So we had to kind of punt our plans down the road a few years, but one of these days we'll be breaking ground and build a new house. But right now we are where we are, and I know there's a lot of people in the same boat, but it's kind of a patience thing. And again, there are other people that have to move, new job changes, transfers, especially with the military. We're starting to see a lot of military transfers happening, especially here in Oklahoma City with Tinker Air Force Base, Lawton down in Altus, and a little bit up in Vance, but FAA also. We're seeing, I've had a couple of people that have transferred in from other states that were being moved by the FAA. So certainly some people have to move, so it doesn't really matter what's going on. Other people want to move, and they want to make sure that they're making the right decision. So, as we continue down this path, hopefully we continue to see improvements both in inventory rates and cost of housing, so we get into a little bit better situation. But homes are a commodity business, so it's all supply and demand. Right now, the demand has dropped off quite a bit, so supply is increasing, which is a good thing for buyers because then you have more selection. It's also a good thing for buyers as sellers are now having to put more work into their homes to get them ready to sell versus 2-3 years ago when it was you literally put it up and you could watch the fist fights in your driveway over people arguing who's going to buy the house. So it is a good thing. It will help prices kind of stabilize, drop maybe a tad. Again, don't see a huge correction, but there is some need for it to at least stabilize. So again, send me an email. I've got all my contact information on this channel, these channels. I'll post this on every social platform that I have. So happy to talk with you, and whether that be phone call, text, email, and if you're interested in signing up for a newsletter just to kind of see how I perceive things, I'd be happy to send you a copy once I have those ready to go. So once again, appreciate it, and hang in there. It'll get better. See you guys.